my clients are faced with these huge questionnaires. 5 years ago, I could get a cyber quote based on the name of the firm, the number of employees, and the annual revenue. Bang, I'd have a quote, $10 million of coverage, no problem. Now, you're looking at 97 pages of questionnaire across multiple insurers, which is a tremendous pain for our clients. But if the clients reverse engineer the questionnaires and think about the fact that every single question that is asked is pertinent because it relates to a threat vector and therefore relates to a control that will mitigate the risk, then that questionnaire process actually has value. And that is more immediate. I know a colleague of mine from Strauss Friedberg, the digital forensics investigations and response teams, has said, insurers are 2 years ahead of NIST and ahead of CISA because they are seeing this stuff in real time. Unfortunately, it also leads to the responses of they're seeing the stuff that can't be controlled, that aggregates, which leads them initially to this knee-jerk, exclusion of risk, which can be very problematic. But that's, that's my problem, that's Peter's problem, that's Mary's problem to figure that out with the markets. But I think it was Mary made the very valid point that, questions are being asked about the value of cyber insurance when you see claims being denied, when you see coverage being taken away, when we should be seeking to expand coverage.
Yeah, totally agree. Yeah, and that's I agree, and I think that from our perspective, this point of information sharing related to best practices of cybersecurity and why you should be doing this to lock down the company, being directly correlated to cyber compliance and obviously the importance of risk management and accessibility to insurance, and that's the evolution that we're trying to drive. Peter, did you want to add to Tom's points?
Exactly, because the sentence creating value, that's I think the big point. And how we do that at Howden is we are not sending out 5-6 questionnaires with 50 pages each. We are going to the clients and having risk audits with our own risk engineers and trying to understand the risk of the client and also to show the risk to themselves so that they are understanding it. Because Andrew, you know the numbers better. It's like if you're able to detect a threat within the first 10-20 days, the average claim is $2 million lower than if you're not able to detect it. And also disaster recovery plans are really important. We're seeing it a lot during claims. If someone already talked to their IT supplier, to their incident response supplier and everything, and they have a plan, they will be able to act according what is needed and bring down the BI risk and not having the risk of insolvency, of bankruptcy, because we are seeing it a lot that companies not dealing with the cyber risk, laying off people after such an event. And this is what we want to avoid. And it's not about discounts of implementing such things. It's about avoiding the claim. It's about avoiding letting people go. And it's all about awareness on the client side. It's a simple comparison. If you're talking about theft insurance, you have a door. So do you get some discount? No, it's the thing you need to get to be able to be insured. Fire, it's the same. So of course it's not allowed to smoke and so on. And cyber is still a young market and it's not everywhere in the heads of the people. So we still need to work on the awareness.
Can I just double click on something you said? You mentioned your teams going out. Is your approach trust but verify, or are you doing those assessments firsthand as part of the application process?
we're doing it within the application process. And we're also helping our clients to be able to, or to get insured if they are not fully implemented all those things.
Okay.
And of course, I need to mention here security scorecard, but also some others like SAFE, so not to only name one, CyberCube, and so on. Those are tools helping us within the risk audit. But finally, you need to do a business impact analysis to understand fully what you're looking at.
Alexandra, do you want to talk a little bit about the unique risks and the threat vectors, for your area of focus?
Yeah, sure. I think it's interesting to see because the cyber ecosystem is changing so rapidly. I think we're not even talking anymore just about risks or attacks on work computers, on companies' ordinary IT infrastructures. But now that things are becoming so much more connected to the internet, like a company's factory or a connected car, I think these are also becoming really attractive targets for bad actors to either disrupt operations or cause some sort of damage. And this is something that we're seeing a lot in the AI team, different types of ransomware on different types of assets. And so I think it's important that we stay prepared for this, because or both controls prior to an event happening when companies can assess and evaluate their exposure. But I think given that a lot of these companies have legacy IT software, or if they are using some sort of cybersecurity system, it might be static signature-based models that can't really keep up with this evolving landscape. And I think in doing a lot of these questionnaires, we can probably figure out that companies are quite underprepared for this new type of attack vector. And I think this has become then a really interesting place for AI-based cybersecurity offerings. So not just talking about companies needing protection for cybersecurity, but companies offering this protection. I mean, there's a lot of providers on the market, but I think to start involving providers of AI-based cybersecurity solutions to shore up your business operations is really critical. And I would see that as probably a very interesting development coming out for these SMEs, particularly in discussing this hard market that, as I mentioned before, I think it's become quite necessary for companies to look for other ways of protecting themselves. And I think using AI-based tools, either implementing them themselves or getting third-party providers is just becoming more important, as threat vectors that we're seeing are becoming so much more different than what we anticipated 5 years ago.
Great. Tom brought up a great point about the precedence of legal liability, not just obviously impact on financial loss, and wanted to ask each of you your thoughts, of the importance and how that's driving, obviously, the visibility by not only the senior management teams of Fortune 500s, but also the board and increasingly government regulation. And so wanted to throw that back out to you with regards to, obviously, cyber controls. Mary, if you want to tackle that first.
I would say that it depends on this. I think that, we're talking to a wide audience. And so it's interesting to see that if you talk to a larger publicly traded company, they're on it because of the FCC. They're tracking and understand they have a cyber, because they have disclosure requirements, right? And so, and the smaller companies, I think, are well aware that this is an exposure. And I think there's just a take about the implementation process. So in terms of regulation and liability, I think it scares more the larger companies a bunch, right? It scares them that they could be held. There's the regulatory side of things. There's the directors and officers that could get in trouble because of not disclosing, and the shareholders get upset. The stock price drops right after a big breach. now the D&O lawsuit comes in. So then there's the regulatory of just like, oh, what have I done wrong here? Something bad happened, and now I have to figure out what I need to do to comply with all the rules out there. And so that's where you have to work closely with legal, privacy counsel. And I think the larger the company is, the more they're dialed in on that. The smaller companies may not understand it as well. So I think so I do run across a whole range of clients that I work with, but I think the market I think it's great. Everyone's starting to be more aware through at the different levels, right? And so what that's turning into, in fact, when in the hard market, I tell everyone, pretend like you don't have insurance for cyber and go out and be self-insured. And when you go naked and have no coverage, right? I know we want to make sure people get the coverage and have the financial, pocketbook of the insurance companies. But if you go out there and have no coverage, you behave and act a little bit differently than if you do have insurance sometimes, right? Think about the rental car. Oh, it's a rental car. I can drive it a little more crazy, right? Because I've got insurance on it. But so I think that from the standpoint of awareness, what's happening, it's translating where people are paying attention. The legal liability comes from different areas, right? It could be from the breach, it could be from contractual obligations with your customers. You have to know where you are in the stream of, we're talking to a wide range. You could be a provider of technology services, you could be a user of technology services. So it's a pretty wide topic, but I think the awareness is there. The underwriters are thinking about it and more aware of it. And I'll let the other panelists talk to their perspectives.
Great. Tom, do you want to attack that?
Sure. Yeah, I think this really speaks to the really dangerous issue for everybody here, from the insurers to the insureds, and for us, in the middle, which is that it's all very well to make sure that your client has got their security controls up to par, up to scratch, and they're pursuing best practices. The problem is the supply chain. You do not know what the risks are with the vendors to those parties and the vendors of the vendors, and it goes further and further down the supply chain. And how do you manage that? Well, obviously, the way that this traditionally has been managed is by contract. And contracts will be specific, requiring insurance. They will have limitations of liability, et cetera, et cetera. But in the technology world, the danger is aggregation. Now, the major providers, from the communications companies that support the infrastructure to the providers of actual services, whether it be Amazon AWS, whether it's Google, whether it's Azure, Microsoft. If you look at their contracts, those contracts are very specific. We will not accept liability for anything under any circumstances. Full stop, end of story. Nothing. You might get some service credits, but that's as good as it gets. But there's a very good reason behind that, because if one of those providers gets hit in a big way and they have legal liability to all of their clients, they're going to go bankrupt overnight. So the question is, do you want the service to survive so that you can carry on using it? And if you do, the answer is you have to accept that liability. I'm looking at a situation right now with a client where a provider that was hosting a large amount of PII got hacked. The PII has been breached. The provider said, we will handle this. We'll do all the forensics. We'll do all of the notifications. Then they came back to our client and said, you're going to have to help with the cost of the notifications. Now, we don't really know what's behind that, but obviously the suspicion is this vendor hit an aggregation issue, that they are so many of their clients are affected. They've probably blown through their cyber limits, and now they're taking that cost bare. The only way they're going to survive is by getting their clients to help out. This has become a supply chain risk. But that's just a microcosm of what the insurance industry is facing, and of what everybody on this call is facing, is as you move to cloud environments, to third-party vendors to help you manage the data that you're holding, the regulatory risk doesn't go away. The regulatory risk is getting worse, and it impacts everybody in that chain. So it's a very dangerous environment. It's a very difficult one to control. Contracts can only go so far. And, you know, when you think about the scale of the risk, let's look at what happened in very, very public incident or issue. White Castle retail burger chain in Illinois breached BIPA, the Biometric Information Privacy Act. The ruling against them was an award of $17 billion. Now, the insurance market can't pay that. The insurance market in its entirety, I don't think, could pay that. But it's a great example of how this risk can aggregate, particularly in the regulatory and compliance environment. And as you get the introduction of statutory standing in these, you know, mass tort litigation then explodes. That's another multiplier. You know, you have GDPR. They can fine a company up to 10% of their global revenue. You know, they've levied enormous fines for compliance missteps against particularly US major corporations, the Facebooks and etc. So Google and several others. So, you know, it really speaks to this supply chain risk that we're talking about here, that it's a very, very difficult environment to manage. And it's difficult for insurers to manage because they can underwrite one entity, one insured. We can have, you know, the on-site analysis of what the risks are within that environment. But the underwriters are not underwriting to just that. It's a much bigger extended supply chain that they are trying to write to. And that's very difficult.
Yeah. And totally agree with you. We've our company has done a lot of analysis on supplier agreements and have seen, you know, the evolution of terms that not only historically related to business continuity and, you know, forms of verification that you had the right controls in place, but increased limits, the need for increased limits specific to cybersecurity and ransomware, and also entire sections related to cybersecurity and all of the elements of assessment, as well as the defenses and mitigation and incident response. So that's very much a contractual issue, and we've seen that. And that speaks to Andrew, you know, with your business and risk rating, not only around the enterprise, but also the ecosystem, you know, of third-party risk. You know, I think that's one area that continues to evolve, of how companies view not only their own perimeter defenses, but also their exposures, you know, for sustainability throughout the supply chain.
Yeah, absolutely. Yeah, I would echo pretty much all the comments we've had thus far, except for the one as far as, you know, not being able to really view and quantify and underwrite, you know, the third and fourth party ecosystem. You know, it's a big push of what we're doing at Security Scorecard. But Tom's absolutely right. You know, where the conversations that I used to have, I mean, I've been with Scorecard now for about 1.5 years. When I first started, it was all, you know, we need better data and ways to underwrite the applicant, the insured. And now, like, the majority of the conversations that I have are like, great, now what about the supply chain? Because, you know, when you look at the stats, I mean, about 2/3 of incidents are not direct attacks on an entity, but they have their origins through a third party. SolarWinds was a huge example of that. And when she did the root cause analysis, it wasn't that SolarWinds had crummy security. In fact, the opposite was true. They took it very seriously. However, the vendor that you do business with is a lot to do with that. We've done a recent study on supply chain risk and how that permeates into breaches and insurance matters. About nearly 100% of companies worldwide in the last 2 years, they have a relationship with a third party that's experienced a breach. So that's pretty eye-opening. Like pretty much everyone who does business with anybody has at least one partner that got caught up in something. When you look at like the global scale of this, almost 2/3 of companies have vendors that span about 5 countries. So I mean, this is not just a domestic exposure, but we're starting to see the real effects of globalization, not just in business, but in cybersecurity structure. When you look at the ratings, we talked about the SolarWinds, or when you look at a first party company itself, they're 2 times more likely to receive our highest A grade security, while their third parties, even for ones who have excellent on-premise, like our walls are great, their third parties are like 5 times more likely to have poor cybersecurity posture. So one way that I think that we can all at the business level do better is really take our vendors to task. Tom and Mary mentioned the important role that insurance has. Insurance, I mean, when you look at any contract, there's a clause that you will see 100% of the time, insurance requirements. I started a podcast called Insurance Requirements because it was everywhere, right? And so because of that, if you want cyber insurance to fulfill the requirements of your contract, to do business, to generate revenue, insurers have a huge responsibility and opportunity to drive improvements in cybersecurity posture. And I think they take that very seriously. But even at the business level, we enable 30,000 plus companies worldwide to not only monitor their own posture, but that of their vendors. And so as part of that compliance requirement, it's not only the point in time assessment, we talk about underwriting and insurance, but even at the company level, like our vendor risk managers are not only doing those point in time assessments, but continuously monitoring. So when their vendors do exhibit issues that we can observe that are likely to lead to a breach, we enable them to contact them and be proactive and work together to patch that up. Because I mean, if you think about it, like on average in large enterprise organizations skew this, but we're looking at about 130 different SaaS applications that business use. So that's 130 opportunities for a threat actor to pierce into one of those. And we see it with MoveIt, right? I mean, this is just the most recent example of a systemic, but you enter through a vendor that is adopted by hundreds or maybe even thousands of organizations. And so when you talk about viewing that, so I mean, not only should insurers be monitoring their companies that they insure, but what does that aggregation look like? Who are your what type of exposure do you have to a single point of failure? And I mean, I would venture a guess that the majority of insurers, if you ask them, a month ago, hey, what's your exposure to MoveIt? How many of your portfolio companies use MoveIt? I don't know. I'd never heard of MoveIt. So I'll be honest. So I mean, insurance, it's a lot to ask, right? But the information's out there. I mean, we through our wonderful threat intelligence team, we had data back to like February where we were seeing this vulnerability in the wild. It wasn't being exploited yet. But when we go back through our logs, we're able to see, and over time we had about 2,800 active servers that had this vulnerability in it across the world, over about 700-800 companies. And so imagine what that data could do in the hands of an insurer. If they are able to, again, going back to property insurers and, the storm is coming, how powerful is that to be able to see what my impact across my portfolio of business and actively reach out to them? I mean, even in situations prior to Move It, I mean, Microsoft Exchange vulnerabilities, I mean, they're a dime a dozen. We see them in the news all the time. But, a few months back, when there's a big Rackspace event, we were able to work with one of our largest carrier partners and do an analysis of their book of business, coupling that with companies that they ensure that had Microsoft Exchange in their tech stack, expose those Microsoft Exchange records or MX records, compare that to the known MX records that we saw at Rackspace, and give them a list of insured customers that they had that had this active vulnerability. So before this, it was hey, I don't know if you've read in the news, but there's a new vulnerability. You should probably check and see if you're affected. And this was a very, passive, sometimes ineffective way of communicating. And now you're able to target that to, hey, we've observed this. You have this in your system. Here's the port number. Here's the IP address that's affected. Take this to your SOC team and remediate it. To Tom and Mary and Peter's point about, this is about preventing claims from happening. This is not a mitigation issue. This is potentially, before an attacker can take advantage of this, you've now remediated and now you don't have a claim.
Great.
And I think sorry, I just want to make the point that the real danger here with these vulnerabilities is the rise of AI. If you think about it from an attacker's perspective, AI is making their work process so much faster. They can identify the vulnerabilities, they can identify how to exploit them, they can even write the code to exploit them using AI. So this just drives even more pressure on the insureds to have a really robust vulnerability identification, patching, and management and audit process. The audit is key. We've come across examples of clients who've been told, by a security scorecard or BitSight or whoever it might be, we're seeing this vulnerability, and the clients come back and say, we patched that. We patched it weeks ago. And it turns out that the patch hadn't taken properly or it hadn't been switched on. So, it just emphasizes the importance of, maximizing your identifications of vulnerability, leverage your MSSP, leverage CISA, leverage, ISAO organizations that you might belong to. They are great sources of information about how to manage these vulnerabilities, but identifying criticality of the patches, triaging them appropriately is really important. And going out to your supply chain with the same information. If you know that you have a host who is sitting on a vast trove of valuable data, make sure that they are addressing those same vulnerabilities. Because if they get hacked, it's going to impact you.
I'll direct that 1 second, Peter, to Alexandra. We talk about obviously the democratization of cyber threat actors and knowledge due to AI. What do you see as far as the counter to that? How can we potentially use AI, as an element of cyber security defense and incentivize, obviously, the adoption?
Well, I think, firstly, luckily, we are not seeing AI on the attack side as quickly as we are seeing it on the solution side. I definitely think that will change, but I would say at this point we have the upper hand in terms of who is using AI in cybersecurity. But I think Tom makes a good point. I mean, I think half of the cyber attacks that were experienced last year had never been seen before. They were completely new. And so because AI is so sophisticated in employing methods that can even exploit human behavior patterns, social engineering and mutations of malware, seeing these threats and seeing them evolve so quickly it is really critical that I think we respond with AI, because static signature-based models just would not be able to keep up. And I think there's a couple of features of cybersecurity that means AI is such a good fit in the cyber market. So I guess some that come to mind is that AI can process a lot of information, a lot of variables very quickly. So it's very useful when you are trying to, when a solution is looking at a file, reading a lot of features at the same time, what kind of file it is, where it originated from, all those types of things. And when a cyber attack happens, it happens incredibly quickly, sometimes in microseconds. I mean, the speed of digitization is just incredible. And you need a high reaction speed from observing this input, observing this ransomware, to actually taking a decision on how you want to respond to that. And I think that's another thing that makes AI very appropriate as a response mechanism here, is that AI can also act very quickly because it learns from its previous decisions and can implement those decisions very quickly. I think as we start to see new business models like crypto as a new way of doing finance, or changes in the working culture, now that people are working from home, the IT infrastructure of an organization is very different. I think AI is very good at essentially learning from these new types of situations and applying them to then unknown situations. So these new types of business models or working spaces. And I think because it could learn so quickly and it can take what it previously learned and apply it again, I would say that it is super important that we start to use AI in cybersecurity, especially while we still have the upper hand and we're not seeing yet as much AI kind of come through on the claim side. When we're looking at the types of cyber claims that we're seeing, I think the claims that are involving or have been contributed to by AI are definitely on the rise, for sure.
Thanks. And Peter.
And not a lot to add, but as we are talking about AI, to give a small off-topic thought, it's like the development that already some criminal organizations collecting a lot of encrypted data just to be able in the near future with new technology to read it and then to sort it out with AI, because there will be petabyte of data to be used for criminal intent. So that's a really difficult thing. We need to think like 2 steps ahead. And regarding the supply chain, my big point always is to gain transparency. That's the main part, because at the moment you don't have the one SaaS provider. You have different layers. A SaaS provider has another SaaS provider, has a cloud provider. There's in a different region, maybe there's redundancy, maybe not. Most of our clients don't know. And going through the buying process of cyber insurance can help to bring in transparency from the risk audit, from bringing together the relevant people like Andrew, like other specialists, other IT or security suppliers, the onboarding process with the incident response team, and also the awareness from the IT to the board. And we are really far, if you're looking at property and everything, there we have the business impact analysis. We don't have it in the digital supply chain, and we need it there. We need the transparency.
Peter, somebody typed a question in that I'm going to throw to you, and that is a question of redundancy. You know, redundancy of suppliers, whether it's a digital supply chain or a manufacturing supply chain. Are you seeing that increasingly in your market? And if,
yes.
if so, you know, how is that evidenced in both contract and in practice?
Yeah, so simple thing, looking at parametrics. We built up, first of all, monitoring system to seeing everything and to tracking all downtime in real time. And we definitely saw that if you have redundancy in place, it's like 60–70% lower risk than without redundancy. What we are seeing now is from different sides, also from the digital supply chain, but also from the normal supply chain, that especially in Europe, they are building up redundancies, also because of COVID and the issues with China and the Ukraine crisis. So there are some things going on where clients, companies looking for redundancy in their supply chain. The difficult issue, as always in such things, is money. Looking on the cloud redundancy, just to have active redundancy will cost you 80% more than without redundancy. And if you're talking to a company paying 100 million for cloud services, and they will pay 180 million in the future, for what? They haven't experienced any downtime in the last 5 years. So you're not paying it for the past, you're paying it for the future. But this is really difficult. So you always will have the discussion with the CFO. And that's good. So you need to find a better way. Maybe it's active failover. Maybe there are other workarounds you can implement, but you need to discuss them. And that's really the important part.
Okay, great. Just to wrap up, it would be great if each of you in closing just gives advice to the audience, as your customer, and as you would to your customer, of how to look at, obviously, the insurance market, risk management, and the opportunities out there to address the challenges ahead. And we'll go in order again. Mary, if you would kick off, and then Tom.
Sure. So I think the engagement of, first of all, it's important. It's everywhere. It's omnipresent, right? It's everywhere, this exposure. And I think it's not a matter of if I'll have a breach, if I'll have a ransomware event, it's a matter of when. And so given that, what I've seen in my practice is there's a huge amount of cooperation and engagement that's occurring amongst different stakeholders within a company. It used to be the IT professional. Well, we didn't even have CISOs at all the companies. Now a lot of companies have a chief information security officer or someone that's just dedicated to cybersecurity. But where I find the best opportunity to assess and get the best deal for insurance, but also manage the exposures to prevent and help everyone have their eyes wide open across the whole risk management of cyber, is if you get the right people in the room. So you want to be engaging not with the finance team, so the CFOs. You want to engage with the legal folks, and the legal folks could be, depending on a company, they may not have anyone from legal, but there could be a contracts person, or they could have 10 people in legal. So it just depends. But also the chief information security officer or the IT person that's in charge of security. As you can see, every company is a bit different, but you want where I've seen the best bang for the buck is to get everyone involved in that process of doing the assessment application. So similar to what Peter and Tom do, the application process is really important to explain yourself. So you want to fill out the applications appropriately, but then there's a lot of very dumb applications, okay, right there, don't have good questions. They're stupid in the sense that they don't match the reality of what really goes on with how companies run their businesses. So you need to take the step of explaining yes or no. Well, I have multi-factor authentication on almost all my applications except this one, because it's a group of people that are doing we're controlling it in a different way because it's the test group on the software group. Okay, so you want to explain things in a way where you wring out the ambiguity. And I tell my clients, I don't want any half-assed, pardon my French, applications filled out. I want an A+ paper. And so that takes a lot of time. So what we try to do is involve the stakeholders, and we sometimes will go through a weekly meeting to get it organized. And then with that, when we turn over this set of information to the underwriters, and I have a team of people that help me with the underwriting process. The underwriters have a more clear picture of what the exposures are and what the controls are and a comfort level. And that typically will allow you to have a better underwriting result. And so, and it includes the supply chain assessments, right? It does include who are you working with and what are controls around that. But I would say the advice is to not go in a silo way, but to really work in a more of a holistic way within the company, which takes some leadership and a little bit of, I mean, I'm a little pushy about kind of getting the right people in the room, and then it goes better, right? And that helps because then you get a good result on the other side, and you help to pull all these people together that are trying to protect the company. So I think that would be my feedback for the audience.
Thanks. Tom?
Sure. I'd actually like to kind of start with where Mary was ending. Cyber risk is an enterprise risk. This is something that affects every stakeholder, from the chairman of the board, from the CEO, who are going to have to sit down with the SEC and explain what happened, be facing shareholder action, be looking at potentially laying off staff, reorganizing the corporation. Too many companies think of cyber risk as something that the IT folk deal with, and they are a bunch of weird wizards who sit in a side room and do their magic and speak a different language, and we just leave them to it because it's their problem. And of course, if something goes badly wrong, the first thing you do is fire them all. That's just so badly the wrong way to handle it, because it really doesn't address the risk. And as Mary said, it's critically important to get everybody in the same room and, importantly, talking the same language. And this is something that, I've found over the last 10 years. I was, in professional services, you have three groups of people who really don't speak the same language and don't communicate well. You have, the professionals who are out servicing their clients. You have the administrative staff who deal with the finance and the HR, and then you have the tech people who deal with all the tech wizardry. You have to get them in the same room. And one of the ways to do that, and a really important way to do that, is to hold tabletop simulations, and to do that at the enterprise level so that everybody understands the chain of command, the chain of authority, who gets to make what decisions. For instance, if you have to pay a ransom, who has the authority to make the decision on how much we pay? Who has access to the funds to actually make that ransom payment available? And can you do that in 2 days? I was speaking to a law firm where they said, to get a decision on a ransom payment, we have to get a partner meeting together. I said, how long is that going to take? They said, if we push it, we could do it in 2 weeks. You don't have 2 weeks, you've got 48 hours. And if you had held a tabletop simulation, you would know that, and you would already have decided who gets to make these decisions and to make it happen. It's absolutely critical, because all the metrics show that the more prepared you are, the better the outcome. And I always quote some of my favorite, sayings about war and decision making in war. Graf von Moltke was the first one to say, I think, no battle plan survives the first encounter with the enemy. So having an IRP, having a BCP, business continuity plan, is all well and good, but it is not going to answer to the entirety of the situation. So people need to develop situational awareness and the ability to respond when things go off plan. And it was Dwight D. Eisenhower who said, in preparing for war, I find that plans are useless, but planning is essential, which speaks exactly to that. And then I have to throw in my favorite one of all time, one of our great tactical thinkers and philosophers, Mike Tyson,
I was
who
going to say
said
the same one.
everyone has a plan until they get punched in the mouth. And that's exactly what a cyber attack is. And if you don't have everybody aligned, singing from the same song sheet, things are going to go badly wrong. So that process of rehearsing, preparing, and coordinating, and the coordination has to extend into your supply chain as well. Because as we've been discussing, the problem might not originate from within your own house, but that doesn't mean it's not going to impact you in the same way.
Great advice. Andrew, in your closing.
Yeah, I think my piece of advice around this supply chain risk or just cyber risk in general. I see the question asked or the statement made back in December that at this rate, cyber risk, cyber insurance is going to be uninsurable, or it is insurable depending on who you talk to. I think there's an element of truth in that. I would qualify that with, if we stay the course, it probably will be uninsurable. I mean, we see the severity kick up, the frequency kick up, but I think there's some immediate steps that we can take. I think first and foremost, we talk about the application process and how important it is to get that right. But, in my view, cyber insurance is not a 1-day renewal or a 45-day renewal or a 90-day or 120. It's a 365-day renewal. And what I mean by that is we have to have eyes and ears on it every day. At the underwriting level, at the portfolio level, at the broker level, and certainly within the enterprise. And we're seeing that with new regulation. I mean, new SEC regs are requiring that somebody on the board be responsible and answer to cyber risk in an organization, right? And so having not just the CISO or the IT or the SOC team, but someone on the board overseeing this. I mean, to Tom and Mary's point, I mean, it's not just an IT problem, and we help CISOs and SOC teams translate that to what really matters to folks at the board level. This is dollars and cents, right? What does this investment that I'm seeking in information security mean to the viability of the company? And it's permeating D&O as well, directors and officers insurance. People are being held to task for this, and so it's not just a mono line or a single line exposure anymore. I mean, not even to get into silent cyber in other lines of business, but I mean, it's really permeating the entire organization. So I would say, moving from a kind of static transactional relationship in underwriting and broking, but moving into proactive broking and continuous underwriting. I think that's the real key to getting this under control. The visibility is out there. And we've proven it not just here at Security Scorecard, but across competitors and in peers of ours. Like, I mean, this works, and I think that is the real key to making this risk insurable, but also bringing everybody to the table. Like my panelists have spoken to. I mean, it's going to take a village. We can't continue to do this on our own islands in our own silos. But when we band together, I think good stuff happens. So I'll leave that in closing. Thank you, David, and all of our viewers and panelists.
Thanks. Peter.
Yeah, so first point, all of the people having joined this call are already aware of this topic. So this is really good. Otherwise they wouldn't have spent more than an hour hearing us talking about it. I keep it short. You need to sit down, invite different experts, get the transparency, find solutions, get prepared, talk to the suppliers, talk about how they see the risk, how they handle it. The process is important. Insurance is nice, but it should be one of the last parts.
And I think that's consistent. It's a great way to end because it's consistent with lots of the topics today. So I appreciate you saying that. Alexandra.
Sure. I guess just to echo what Mary and Tom said earlier, I think it's really critical for companies, especially SMEs who might not be as on top of their wordings, to really be aware of what their exposures are, what's in their wording and what's not. And if there is something carved out of the wordings or some exposures that are not insured, I think it's really important to make sure that you're getting yourself prepared in other ways. So looking at some sort of cybersecurity offering, some sort of protection. For example, the insurance product that we write in the team essentially enables cybersecurity providers to guarantee their performance and cover any losses of their customer if that performance is not met. And for an SME, this is another way that they can have losses that they suffer covered ultimately by insurance, but different from a traditional cyber insurance policy. So looking for those alternative sources of capacity or of loss coverage in the market, I think is also very important, that if you can't find it in the traditional market, to keep trying to protect yourself from a cyber attack, because I think what we can all agree with here is that it's probably almost certainly going to happen to your company at some point, and so it is best to stay prepared.
Thank you. And I'll end, just reiterating Tom's point. I think this point of tabletop, and your talk about planning is the most important element of what we've addressed today. And I'll say it again, related at the end of the day, it's about security, but it's also about obviously the implications on compliance, legal, regulatory, and obviously risk management is a big component to mitigate the financial impact of that. From our perspective, one of the bits of advice that I can share with the audience is not to only focus obviously on perimeter defense. Our company has been highly focused on what we call zero trust. It's kind of the future of cybersecurity, and what happens when the server, the computer, is already infiltrated. What happens when administrators are compromised? And that's really the next thing just to ask yourself in planning is, what kind of controls do you have to lock down systems to drive policy and governance? And that's a real differentiation that we look to advise people from a technology perspective. And then obviously all the elements of what we talked about today, the importance of constant assessments of the types of verification that you're running, Peter, hands-on, ensuring that penetration tests are being run, red teaming, all of the aspects of ensuring that that controls and processes are addressed, and that you've got a plan to respond quickly. So with that, I just want to thank every one of the panelists and the audience for attending today. It was an hour and 25 minutes, but I learned a lot, and I hope you did as well.
Thank you.
Thank you.
All. Take care. Thank you. Okay, panelists, thank you.